this property's worth £1 million and we could get the TOGC treatment, we pay stamp duty on 1 million. If we don't get the treatment, we pay stamp duty on 1.2.
Oh.
So that can be, on its own, I think that was probably £50,000 or something. Hi everyone, my name's Luke, I'm Tax Director here at Gravitate, and today Sam and I will be talking about VAT for landlords, particularly on properties.
Yes, my name's Sam Newton, co-founder of Gravitate. I am just going to be here to try and eke some questions out of Luke, who is a professional on the topic of VAT. So yeah, let's get stuck into some questions. So the first one we're going to look at, the first topic, is going to be residential versus commercial property and how that treatment differs.
Okay, so with property, obviously we've got residential and we've got commercial property. Residential property is exempt for VAT, so you cannot charge VAT on it, and commercial property could be either exempt or standard rated, which would be 20% VAT to most normal people, and the treatment for commercial property depends on certain elections.
So residential first, so we say exempt, that means I've got a residential property that I own and I'm doing some work on it. What's the implications of that essentially?
Yeah, so normally for VAT, if your turnover is above a certain limit, you'd have to register for VAT, as long as you're making taxable supplies. But in this instance, no matter how many residential properties you have, you wouldn't have to register for VAT because it is exempt, meaning it's completely outside the charge to VAT. So it wouldn't matter if you've got £200,000 in turnover in rental property from residential, you just wouldn't be able to register regardless of if you wanted to. So any VAT costs on accounting fees or repairs or any other professional fees wouldn't be allowed to be claimed on a VAT return as you would for a trading business.
Yeah. So I suppose that makes sense. Obviously the end user is going to be the general public, and if we were to be having to register for VAT, then obviously they're not going to be able to cover that VAT, so their rent would generally increase by 20% for the small benefit of recovering some of the VAT suffer on costs.
Yes.
I suppose the only place you technically feel like a little bit hard done by is if you are doing a big renovation job, whereby, like I say, you're spending significant money renovating a property, and unfortunately in that position, if it costs £10,000 plus VAT, it's costing you £12,000 to do that work.
Yes, it is, yeah. There are some niche circumstances where the VAT treatment on the refurbishment work can be on a reduced rate of VAT, but those scenarios are relatively small, and primarily it will be sort of changing the number of dwellings where we would see that, or converting from commercial to residential. But we'd normally say with anything like that, if a client is doing such a significant project, just to reach out, because you will need professional advice, and the contractor may not know the correct treatment.
Okay.
So they may ordinarily charge 20% VAT when maybe that's not correct.
Yeah, I see that. We have seen some examples of contractors flagging it. So we have seen some examples of contractors flagging it. So there's obviously some good tradespeople out there. And then we said, so from the commercial side, there's different options then. So we've got exempts. Would there be certain scenarios where they're exempt, or again is it sort of more optional?
Yeah, so it depends on the age of the property, and it will also depend on whether the property has had certain elections on it.
The property will either be exempt from VAT, or you can opt to tax, so you can take on the option to tax the property. So that's sort of the next topic, and sort of when to do that. Yeah.
So option to tax is quite complicated in terms of probably the wording isn't the most suitable. So it's called an option to tax, which is an election, and that it applies to the owner of the property. So if we were acquiring a new property as Gravitate, and it had VAT charged on it, and we were looking to let that property out, that property would be exempt from VAT. And if we'd incurred a significant amount of VAT on the cost of buying it, so if we bought a property for £500,000 and there's £100,000 in VAT, because we're making exempt supplies on the rental, we can't claim back that VAT, which is significant. So we may look in that circumstance to do an election to opt to tax the property, which would have two side effects. One, it would mean we charge VAT on the rental, to the customer. Number two would be, because we're generating taxable supplies of rental income, that means that we can then claim the VAT back on the initial purchase, and the professional fees. So that can be quite beneficial the more valuable the property becomes. And it isn't mandatory, so it's completely optional. So we've had one recently where we recommended to do it and the director was a bit uncertain, but given the value of the property, it was generally speaking a no-brainer. And I suppose one thing that you may want to consider is your tenants. If your tenants are VAT registered businesses, generally speaking an option to tax would be sensible, because when you're charging Gravitate rent plus VAT and Gravitate can claim it back, it's not a cost to the customer.
I see that.
Whereas if we were charging a business that was a firm of financial advisors who may not be VAT registered because they're exempt from VAT largely, then that is an extra cost to them. So that could put them off. You may lose the tenant, and you may have to reduce the rent if it's only exempt businesses that are taking that property. Or I suppose it would be similar if it was, I don't know, a small firm of hairdressers that weren't VAT registered. You'd have the same impact for them. It's extra cost to the business.
So do you think generally builders will factor in the end use, or certainly maybe not the builders, but certainly the owners of the premises, when they're doing builds, they will consider, okay, who is my intended end user here? Because the decision I make now with regards to the VAT treatment and me recovering potentially a small amount of VAT might hinder my ability to let it out.
I suppose it could be a thought, but I suppose it depends on the numbers. If there's that much at stake, it may be a factor in the decision making, but it may be outweighed by £250,000 of VAT up front. So they may think, well, we'll accept a 10% lower rental income because we can get such a big amount up front. So it could be a factor, and I suppose the other thing would be is, although it's a factor, you could apply for a change in use in planning permission, which then might completely swing the argument one way or the other. So it'd probably be in the head of the person doing the works, but may not be the final answer.
I've certainly seen it with physiotherapy clinics, where I work with a company who own physiotherapy clinics and wanted to expand, so they were looking at new venues all the time. But like I say, we'd always, as part of the review of the property, get the rental through, and then every so often we'd get a plus VAT on the when it came to sign up, and we're like, that's actually quite a significant difference to our business. Like you told us the rental's going to be this, and then at the last minute you basically
throwing VAT on.
So no, we've definitely seen that and the implications of that. You obviously briefly mentioned there changing it then, like obviously in an ideal situation, but in certain situations, like I mentioned there, physiotherapy clinic, if I was a developer and wanted to build a physiotherapy clinic, I would want to, like I say, build and recover all the VAT, then do a change, knowing it's a purpose-built property and it's going to benefit my tenants to, if it not to be got registered in the future, or opted to VAT. Can you go through that process, or is it not as easy as it sounds?
It's not as easy as it sounds. So if you do an option to tax, it's a long-standing election, and you can only opt out in certain circumstances. So I believe the first one's within 6 months, and then one of the other criteria is after 20 years. So because it's such a long-standing fixed commitment, it's very much always a thought to say, what's your plans with the property now and what's the plans long term? Because it may be good up front, but if that causes a massive issue later on, it could be a problem, or it could mean that you may need to move the property on for somebody else to do the change of use, which again could cause significant transactional fees. But anything to do with VAT on property, just based on the values that these properties are going to cost, are going to be usually at least 5 or 6 figure sums.
Right. Yeah, that makes sense. Is there anything else on opting to tax? Or?
I'd say the main thing on opting to tax would be where we mentioned earlier that residential properties are always exempt from VAT. You can never elect a residential property to tax, so it will never have VAT on. And the only nuance would be if you had a building that was mixed use, so you had commercial units on the ground floor and flats above. You can elect to tax the building there. which does lead on to something called partial exemption.
So yeah, a bit more partial exemption then, so is that a prime example of that situation and where we'd like to see it then?
Yes, definitely. So if you were a landlord and you had one large building that was a block of 20 flats and commercial units on the ground floor, you've got a mixed use building which you may elect to opt to tax. That would mean that you'd be charging VAT on the commercial rents, but you obviously would be charging VAT on the residential rents. The benefit of that would be that you've got more chance then to recover VAT. Because if you didn't opt to tax, you wouldn't be able to recover that on anything because you're not charging VAT. Or maybe not the downside, but the complexity is because you've almost got two parts of the business in one, the commercial letting and the residential. The business is what's called partially exempt because part of it, the residential is exempt, part of it is standard rate VAT. The reason that causes a complication is standard VAT returns, the business will be fully taxable, so it's charging 20% VAT on everything. When you've got that mixed partial exemption, should I say, what that means is the VAT return becomes more complicated. You have the standard rules where you're charging the VAT and recovering the VAT, and then essentially there's a pot of VAT which covers both parts of the business, and you have to do calculations for what you can recover. So it will give you a financial benefit, but there will be more administrative work to be able to pull the data through from your bookkeeping system to be able to recover the VAT. So that's somewhere where if you've not previously been partially exempt, you probably want some sort of support to check that you're doing it right.
Like I say, we work with a number of partially exempt businesses where, like I say, they have that responsibility and we help them with the calculations. So essentially there's that quarterly adjustment to the VAT where an element, as Luke said, of the VAT to recover will be limited, and then there'll be an annual adjustment essentially to say, okay, we've done it quarterly and sort of estimate the position, but on an annual perspective, like what element of that VAT should we be claiming?
Yeah, because it can be skewed by the quarterly amount, can't it? Yeah. And
typically, you see that linked to turnover of.
Yeah, there are. You can apply for special. I can't remember the phrase, but special treatment on how you pro-rata it. Essentially, there are I think 3 ways as standard, but you can apply for others. So it may be that you might do it, particularly for buildings, you might do it on square footage. But everywhere is slightly different. So again, if you wanted advice, it might be something that you might say, well, we're doing it on this basis at the moment, and it might be better to look at a different way because it may be more beneficial. Or it may be that if you're not using a standard process and you've not applied for clearance with HMRC to use it, you'd want to get that rubber stamped.
So you mentioned there's a few different options. So what like for the special apportionments, like what are the main 3? So
I would say the main 3 would most likely be, as mentioned before, floor space would often be one because it's quite easy and very simple because it's a defined number. You may do it on a transaction count basis, or you could potentially do it on a staff time basis. I mean, they're probably more likely to be done for, say, service-based businesses. But then there where you've got the special criteria where you could apply to HMRC for a different apportionment. But they would normally be for more niche scenarios. But I suppose, depending upon the business and depending upon the scenario, each can be looked at on their own facts.
Yeah, I suppose the key thing there is it's no different really to, like I say, any individual realistically can register for VAT in the first instance. Like we see many businesses doing it, but there is more schemes available than you think. So that is why certainly at times it's worth appointing a professional like ourselves who can support on the register and VAT. But it sounds like in this example as well, like again, it's another complexity, and by assessing those 3 options and the standard option, of course, sometimes it's worth investing some time in because, like I say, it could save tens of thousands of pounds over a period of time.
Yeah, definitely.
So sort of gone through mixed use and partial exemption then. So what about VAT on property sales and transfers?
So that's primarily going to come up on commercial properties, given we don't have that on residential. But ultimately, it will primarily depend most of the time on whether the property has been opted to tax or not.
Yep.
There can be instances based on the commercial property and the age of the building, whether it may be charged the VAT, but they are relatively rare. So if we use this commercial property for example, if we bought this property off the landlord and the landlord had opted it to tax, then the landlord would be obliged to charge us VAT on the purchase price.
Yeah.
And there are very rare circumstances where that can be removed, so that will be an increased purchase price to us. And obviously from a purchaser's perspective, because we're charging VAT to our customers, we can recover the VAT.
Yeah.
But obviously it's a big upfront payment which causes cash flow issues more than anything.
So like I say, we're gonna probably want £1 million for this property, so we're going to pay £1.2 million for it, knowing that we're going to have an outlay of 200k, and then we're going to recover VAT, and then we're going to recover that 200k at some point. So I say it's a timing difference, isn't it? More than anything. And so I assume that comes down to planning. Would you ever see examples of businesses switching to monthly VAT to try and, if it was that significant?
I've never seen them try, because I think the criteria usually for VAT, you've got to always be on repayments rather than be one. But I suppose a tactic you may use, dependent upon the numbers and the quantum, would be you could change your VAT stagger. So if you had quarter ends of June, September, December, you bought a property on the 31st of July, you change your VAT return to a 1 month return, it would speed up the figures, plus the if you compared it to bridging finance, for example, which is quite expensive, a 2 month speed up of the cash coming back would be often a huge benefit to the business.
I suppose one thing I've certainly come across is a transfer of a going concern, where the buyer doesn't have to pay the VAT, and I've sort of been asked it as by solicitors and stuff like that as part of the transaction. So just talk through how that sort of works.
Yeah, so a TOGC, or a transfer of a going concern, is quite a complex matter. A lot of VAT is at stake, and it's a self-assessed position essentially. So you'd have to get approval from your tax advisor first and be able to get the solicitor's metrics drawn up in the contract so everybody feels protected and assured that it's correct. But essentially, if you've got a landlord that was renting a property to us, for example, and that landlord sold that property to another person who was going to let the property to us, as long as the criteria are met in legislation, in that instance, it would mean that VAT wouldn't have to be charged on the transfer and then recovered. They basically say there's no point in charging it and immediately recovering it in that scenario. But
just because, and it's like I say, it's because it's
continued. There's no break in the chain essentially.
Which makes sense.
But the times when it doesn't happen is if, for example, if the landlord sold the property to a trading business, the trading business is going to use the property, not rent it. So the rental business has stopped, therefore there's no transfer of a going concern. So structure can be key in those type of transactions.
No, I get that. And again, just putting a real life example to it, we supported a client who was acquiring a pub or restaurant, and what happened was the current tenant who was transferring over, due to there might have been some delays and some legal stuff with the transfer happened, they ended up closing down and stopped trading. And even if that was for a few days or a week or whatever, they basically meant that it was no longer a transfer of going concern because it's gone from a non-trading pub restaurant to a trading pub restaurant, and therefore that was due. And so, like I say, again, that is key, the education piece, because like I say, he ended up the client we acted for ended up going back on the price, saying, look, I've got to find another X thousand pounds, and we need to have a conversation about the price. And like I said, that was just by merely not trading a restaurant for a few more days. So
the one that always reminds me, we had a client a few years back who was looking to acquire a property to trade from, and the way they structured it wouldn't have worked. So we went back to the drawing board and said, right, what do you want to achieve? You want to get these properties. We managed to get them a transfer of a going concern, which was massive for them, which saved them, I think the bridging finance would have been, I don't know, 25 grand over a quarter, because it was £2 million purchase price. So that saved them a lot of money. And the other benefit of a transfer of a going concern is your stamp duty land tax is based on the VAT inclusive price. So if we used the £1 million example here, if this property is worth £1 million and we could get the TOGC treatment, we pay stamp duty on 1 million. If we don't get the treatment, we pay stamp duty on 1.2.
Oh.
So that can be, on its own, I think that was probably £50,000 or something. Big numbers essentially. So in all cases like that, it's very much always best to look at what the plans are. Maybe doing it the way that we've got it planned at the moment isn't the best way, and we can look at different ways to meet the objectives but more efficiently, essentially.
Yeah. So buying or selling a property, getting an advisor
Yeah.
feels like the answer. And the last topic we've got to discuss is sort of VAT registration and compliance for landlords.
Yeah. So I suppose on a very sort of basic level, if you've got commercial properties or mixed-use properties, for example, and you're VAT registered already because your properties are opted to tax, it may be that you're doing your own partial exemptions, and that's probably the hardest aspect that you'd want to consider. I suppose it'd be incredibly rare that you would never have properties that were, it'd be very rare, sorry, to have properties that needed to be charged VAT on and you haven't registered, because primarily the VAT registration limit is currently 90. Yeah. You've got a £90,000 threshold before you need to register for VAT. If you had commercial properties where you wanted to register opt to tax them, you're only doing 50,000 turnover, you just register voluntarily. But the partial exemption is where you probably want some support on, even if it was quarterly or annually. And I suppose the second aspect would be if you've got commercial properties or mixed-use properties and they aren't currently charging VAT, they're not up to tax, you may want advice from us to see if it's beneficial based on the property, based on the future plans, based on your tenants. So if that was the case, we can look at if it's beneficial and just get in touch.
Perfect. No, I think that was really useful. I say touched on some of the key topics of VAT, clearly a complex area, and certainly one we get lots of questions on. So yeah, if anyone does have any questions off the back of this, then yeah, feel free to reach out to Gravitate. Luke is our main man here, but we also have a building out tax team as well, of people who can support and help and advise landlords and on the complex nature of VAT.
Thank you.
Cheers.